Is Corsair Gaming stock finally worth considering as a buy now that the hype around the stock has really died down, especially here on YouTube? As we walk through their financials from their Q4 report, which came out last week, we'll take a look at some of the positives that are showing signs that the business has finally bottomed and that the major slowdown for the products of Corsair Gaming has kind of been behind them in 2022. We'll also take a look at some of the negatives, mainly the debt on their balance sheet that is causing them to pay quite a boatload in interest expense, and we'll also take a look at the stock-based compensation when we take a look at Corsair's cash flows. And then not just the bad, we'll also take a look at the ugly, which is frankly their technical chart. We'll point out some of the patterns that a stock like this tends to make over its history, and then we'll take a look at some levels where I think you can consider maybe picking up shares of Corsair, or at least how you would know when to buy shares of Corsair from a technical perspective. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Bringing you guys a slightly different video covering a small cap stock. Certainly we haven't covered many small cap stocks here on the channel, and based on its definition, a small cap is considered a market cap roughly between 300 million up to $2 billion, and with Corsair Gaming being right around a $1.4 billion market cap, certainly falls under a small cap umbrella. Now, shares of Corsair have significantly underperformed really any index, and especially mega cap stocks, as shares are down nearly 25% over the past year. It doesn't really have a 5-year history, as this company went public late in 2020. Now, shares of Corsair Gaming did rally after they reported their Q4 results. Revenues came in at $417 million. That was good for just 5% growth year over year. Did miss estimates on Wall Street by roughly $11.3 million. And then bottom line also coming in with a miss, as Corsair posted non-GAAP EPS of 22 cents. Wall Street was expecting a number closer to 25 cents. So a double miss for Corsair, and especially when you look at the growth rates, just 4.7% year over year, especially on a Q4. This is the holiday quarter where you have a ton of holiday gifts and Christmas gifts really moving through people's hands, and Corsair being a company that caters towards the younger generation and really that gaming audience certainly should see a higher revenue figure, especially in that holiday quarter. Now, in terms of 2024 outlook, Corsair guided net revenue to be in the range of 1.45 to 1.6 billion. This company doesn't provide Q1 outlook, but rather provides outlook for the full upcoming year. Now, here on Seeking Alpha, that figure has been updated. As the midpoint, we take it at $1.53 billion. That would be good for just 5% year over year revenue growth again for the full year 2024. So this company from a top line will still continue to experience very modest mid-single digit growth on that top line. They are expected to grow their bottom line at a faster clip, closer to 30% for the full year. And you see, even on a forward basis, not trading wildly expensive. That's one of the positives for this stock, as the valuation certainly isn't as inflated as some of your other micro cap or small cap stocks, trading at just an 18 times forward price to earnings, right in line with the average S&P 500 price to earnings. And so from that perspective, certainly not wildly overvalued. And that is one of the positives that you can point out with Corsair, that the valuation certainly not wildly expensive. Now, again, we took a look at their midpoint 2024 guidance, $1.53 billion in revenues. The other thing they're guiding for is 27% gross margins. When we take a look ahead to their gross margins that they posted in this most recent quarter, they posted total gross margins of right around 24.6%. Then for the full year, posted right around 24.7%. Again, total gross margins, with one of their business segments posting gross margins right around 33%. So with Corsair guiding that their gross margins for full year 2024 will come in at 27%, they're expecting those gross margins to continue increasing as the year goes on. And that's certainly bullish for Corsair Gaming. This company has seen a substantial compression in their gross margins, especially when you look at it from a 2020 or 2021 perspective. And now they're looking to expand those gross margins once again, as it seems like those gross margins tended to bottom out in 2022. Now, from the transcript of their conference call from this most recent Q4, the CEO for Corsair Gaming, Andy Paul, said this when it comes to expectations for 2024. He said, looking forward to 2024, we expect that the gaming components and system segment will be similar to last year, as we are in the mid-cycle for new GPUs, and the next big GPU launch and demand surge will likely be in 2025. And so for one segment of Corsair's business model, especially their gaming components and system segment, that they're expecting to roughly be flat in 2024, won't really expect too much growth on that side. And I think that's what's weighing in on the revenue guidance for Corsair Gaming, coming in at just roughly 5% growth for the full year, considering that they really won't be able to expand revenue sales on that gaming component side for the whole year, just because they're in the mid cycle of that GPU launch and then the next big GPU launch will come in 2025. I think the other bullish thing for Corsair Gaming in 2025 is you have likely a big surge from just gamers getting into new games. I know the next generation of Grand Theft Auto is expected to launch early on in 2025, and certainly new games tend to help out gaming companies like a Corsair, even to a certain extent competitors like a Logitech. And so as you have a GPU refresh in 2025 coming, and on top of that, you have new games like the next generation Grand Theft Auto coming out in 2025, I think both those things tend to prove bullish for Corsair, at least in 2025, maybe not this year in 2024. Now, in terms of their other business segment, gamer and creator peripherals, that they expect significant growth in, especially from the new products they've recently launched, and that some more they're planning to launch in 2024. And they're planning to enter 2 new product categories in 2024. That is simulation racing and mobile controllers. And I'm not sure how big the opportunity for these 2 markets are. Corsair is a company that tends to sort of grow both organically and through lots of mergers and acquisitions. They have quite a few other companies under their umbrella. And so probably part of this is organic, but then also you can expect some growth from their mergers and acquisitions. But regardless, significant growth in this creator peripheral segment is certainly good to hear. And as we'll see later on, the margins on this segment is actually far higher than the margins on their gaming components. And so we want to see growth in the peripheral segment, as that will help expand Corsair's margins, as they are guiding for roughly a 300 basis point expansion on those gross margins. So certainly that will contribute to greater bottom line profitability. Now, the other important thing with Corsair Gaming is just taking a look at their management team. This company is led by CEO Andy Paul. He's also the president, and Andy Paul is still a founder of the company. He is still a part of the company, and still as CEO, it is a founder-led company. And actually that is quite impressive, considering this company was founded in 1994, although they went IPO just in 2020, so have only been public for right around 4 years. This company has been around for a very, very long time. And the fact that they're still founder-led is impressive, considering that this company has gone through quite a few ups and downs. They've gone through the dot-com bubble, they've gone through the 2008 financial crisis, and then they've gone through COVID's peak, absolute boom in their business, and then also subsequently 2021 and 2022 slowdown in the demand. And they've been able to kind of weather those storms under CEO Andy Paul. He's not been booted out, as you've seen a lot of CEOs that have gone through tremendous declines in their stock price just tend to get booted out. And I think Corsair's board of directors really recognized that the boom and bust cycle for Corsair depends largely on what goes on in the economy and the macro environment, and less so on how management runs it. Certainly he does have a level of decision making that does impact the performance of the company, absolutely. But I think the large declines in Corsair's business model, especially in 2022, was not really his fault. And so the fact that he's still at the helm of the company is quite impressive, and certainly something I do tend to like. Now, from a broad-based perspective, we talked about their 2 segments, creator peripherals and then gaming components and systems. And these are just some of the products that you see for Corsair. This company does tend to sort of cater towards your PC enthusiasts, the people that really tend to build their own PCs for gaming. And so they're on the higher end of the market in general, especially when you take a look at their competitors like a Logitech, like even a Razer Gaming. You can look up their products on Amazon, and you tend to find Corsair Gaming's products tend to be higher priced than their competitors, just because of the market they're trying to attract and trying to target, certainly more so for the higher end gamer. And certainly that has also affected their business in a pretty substantial way, considering how high inflation has really been. A company like Corsair, which is frankly quite discretionary, you don't need these products, they're not essential. And so in a high inflationary environment where you have grocery and gas prices skyrocketing, you tend to pull back on spending on discretionary items like a gaming headset, like gaming furniture. And even if you don't pull back completely, you'll more than likely pull back to a lower price competitor like a Logitech. And so considering that Corsair sort of caters towards the high end, high inflation certainly hasn't helped them. And then on top of that, now you have a high interest rate environment, and those tend to hurt smaller cap companies and especially high discretionary companies like a Corsair a little bit more. So I think just the fact that they cater towards the high end of the market has proved to be challenging over the past, but I think that is still a growing area for Corsair. It is a growing market, and now that the worst for the business is behind them, maybe they have some room for improvement. Now, as we spoke about their 2 business segments, first let's take a look at creator peripherals. Revenues for that business unit climbing year over year pretty nicely, up roughly 16%, up from $117.8 million. Same time last year, now up to $136.8 million. So again, you saw that 16% rise year over year on those gamer and creator peripheral segment, but at the same time, you saw roughly flat revenues basically slightly even down revenues on those gaming components and systems. And that's exactly what Corsair management is saying, that they're basically in the middle of a refresh cycle. So they're not really seeing growth on this business unit, and they expect to really see flatlining revenues in the segment over the next year. So you see gaming components have kind of stalled out at roughly $280 million. Again, keep in mind, this was Q4 over at Corsair. Tends to be a holiday quarter, tends to be a large quarter for Corsair. And so in quarters 1, 2, and 3, you'll see numbers likely smaller than this. Now, what's even more fascinating on top of that is the gross profit and really the margins for each of these businesses. So off of $136.8 million of net revenue, Corsair netted out roughly $50.8 million of gross profit on that gamer and creator peripherals segment. That is up from $39.6 million same time last year. So you see expanding gross margins on those gamer and creator peripherals in this most recent quarter, up from 33.7% now up to 37.2%. So that is certainly good to see over at Corsair. They're expanding those gross margins in that business unit, although it is much smaller still than their gaming components, but it is still growing at a faster clip. And in 2024, that is the business unit that is expected to have significant growth. Now, in terms of the gaming's component and systems, there you saw gross profit actually declining down to $51.7 million. Last year, you were closer to $58.2 million. So certainly there you see a contraction in your gross margins from 20.7% now down to 18.5% in this most recent quarter. For the full year, you did see expanding gross margins on both business units, and so that did help their overall gross margins for the full year continue to expand, up from 21.6% now up to 24.7%. And as we saw, they're guiding for roughly 27% total gross margins for the full year 2024. And so while you have certain things to like about this, the fact that the gamer and creator peripherals margins will continue to expand, but the fact that the gaming components and systems margins, you really likely won't see them expanding until 2025. There's a bit of give and take with this business, and at times it does tend to grow faster than others, which ultimately causes it to be a slightly bit unpredictable, which certainly the investors over at Corsair Gaming tend to not like. Moving on to their income statement, paints a similar story that we just saw. Net revenues for this most recent quarter coming in at $417 million. That was good for 5% growth year over year. For the full year, coming in right around $1.45 billion. That was good for roughly 6% growth on a full year basis. So they just posted 2023 full year revenues right around $1.45 billion, and then their midpoint for full year 2024 revenues coming in right around 1.5. So like we said, not a whole lot of growth on that top line, at least, that you can expect for Corsair in 2024. And that's certainly something you have to keep in mind. This company won't be able to expand those top line sales nearly as fast as they would want to expand their bottom line margins. And so where this company can control their costs and really help their margins and net income expand is on the operating side. As you see, sales and general administrative climbing actually decent amount in this most recent quarter, but for the full year, you see roughly staying flat at $284 to $285 million. And then product R&D also ticking up slightly on a quarter over quarter basis, but for the full year actually ticking down. And so this company really controlling costs on that operating side. Despite their revenues not growing nearly as fast, they were still able to turn around their business from an operating loss of roughly $54.7 million for the full year 2022 now to profitable on an operating basis, up to operating income of $9.6 million. And I think that will continue to be the story over at Corsair, at least in 2024, that their top line really will grow in the mid-single digits, but they'll look to control those operating expenses, look to really control SG&A, and then tick up product R&D just a little bit. And so that will help ultimately their operating income. And as they lap pretty terrible numbers, frankly, in Q1 of 2023, those numbers that they'll just post in Q1 of 2024 will, in my opinion, look pretty solid. Now, in terms of interest expense, this is one thing that I certainly don't like over at Corsair. You see off of 12.1, we'll call it roughly $12.1 million of operating income in 3 months, they have to pay out roughly $4.3 million in interest expense. And for the full year, paying out roughly $17.4 million of interest expense. Again, that is just off of the fact that they earned $9.6 million over the whole year in operating income. This company has a ton of debt that they're paying interest on, and frankly, they're paying more interest than operating income for the full year, and that is absolutely absurd. This is something the company should look to reduce, and when we walk over to their balance sheet, we'll see they have a ton of debt, in fact, more debt than cash on the balance sheet, and so that debt is contributing to a higher interest expense, certainly eating in to their bottom line profitability in a pretty substantial way. as you see for this most recent quarter, Corsair did come in with a positive net income of roughly $7.5 million on a year-over-year basis, roughly right around flat. But for the full year 2023 did post a net income loss of right around $1 million. And so that's still surprisingly shocking for this company. The fact that they're roughly 2 years away from that 2021 pandemic boom and they're still posting a full year net income loss, largely due to that $17.4 million interest expense. And again, year over year, that has gone up substantially, telling you that Corsair year over year has taken on far greater debt. And that is certainly not a good sign over at Corsair. That's one of the biggest red flags with this company and something they should look to turn around, in my opinion, sooner rather than later. The other thing you get with this company is some share dilution. You went from 102.3 million shares outstanding up to 106 million shares outstanding. So this company is still diluting you. And largely that comes down to their stock-based compensation, which we'll take a look at on their cash flows. This company is still handing out just an absolute boatload worth of stock-based compensation that I think they should control. From a balance sheet, like we said, sitting on roughly $180 million in cash and restricted cash. On top of that, you have roughly $240 million worth of inventories on a year-over-year basis. You see that actually ticked up pretty rapidly, despite this being a Q4 holiday quarter where I would expect Corsair to move their inventories rather quickly instead of holding on to them. The fact that your inventory number actually ticked up substantially over this Q4 is a bit of a concern in my opinion. And that brings their total current assets right around $711 million. But keep in mind, majority of this is in these inventories, and these inventories really aren't as liquid as it might seem. If Corsair looks to move out these inventories rather quickly, they'll have to do large markdowns, large price decreases that will ultimately hurt their gross margins and hurt bottom line profitability. And so if they want to move out this inventory for a higher price, it will take time. It's not very liquid as current assets might seem. And so that's something to keep in mind, the fact that if Corsair does want to move through these inventories quickly, they'll have to do large markdowns. Now, in terms of debt, they have roughly $12 million worth of current debt that they have to pay off within the next 12 months. They do have also $186 million worth of long-term debt. Year over year, that did decrease. And as we see on their cash flows in just a moment, Corsair did pay back some debt, but consider the debt for this balance sheet still more than the cash and cash equivalent. So the fact that Corsair has positive net debt, not really a great sign. And this debt is what's causing them to pay a boatload on that interest expense that is really eating in to their bottom line profitability. So I think debt repayment should be at the top of the priority list for Corsair, just looking at this balance sheet and their statement of income. Otherwise, the balance sheet looking all okay, not a great balance sheet because of that large quantity of debt, but certainly not terrible and probably better than it had looked in the past. Now, moving on to their cash flows, we pull down that $7.5 million of net income. That's for the 3 months. For the full year, we still have roughly a $1 million net loss. From a year-over-year perspective, has turned around substantially, but still not profitable for the full year. And then on top of that, over the course of 2023, they handed out roughly $30.8 million in stock-based compensation. That is up substantially from 2022, where they were handing out $22 million of stock-based compensation. Even for the last 3 months, they handed out roughly $7.6 million of stock-based compensation. That is actually more than they earned on a net income basis. This company is still just handing out an absurd amount of stock-based compensation. Year over year has increased both on a quarterly basis and a full year basis. I think the fact that this company is turning around their profitability is certainly a good sign, but I think they should look to control the stock-based compensation. They're diluting shareholders. And while this is a non-cash expense, it's certainly still an expense one way or another. You have to pay your employees, you have to pay your executives. And I think they're paying their executives just a little bit too much considering how much net income they're really posting. Now, when we add that back and add some other line items back, we get to a pretty nice net cash provided by operating activities figure, roughly $57 million. Year over year is up substantially, but consider the fact that your stock-based compensation is also up, and so you add a fair amount of that back as well. And so with that, they paid back roughly $24.7 million worth of debt. That is certainly a good thing over at Corsair. Continuing to pay off this debt, looks like that payment of debt has accelerated on a year-over-year basis, and then the rest they got to add onto their cash pile. So in my opinion, Corsair can certainly do a better job paying off this debt, likely pay off more debt. Instead of adding some cash to the balance sheet, I think it's more important to pay off that debt to reduce that interest expense. I think that is certainly something I would like to see if I was an investor in shares of Corsair. So overall, a mixed report from Corsair, there's some things to like: the fact that gross margins are expanding, the fact that profitability is now just turning around, as you see, on a year-over-year basis, but still some things to dislike: the fact that they're handing out more and more stock-based compensation, and then the fact that they still have quite a bit of debt on their balance sheet that they should look to pay off faster. So if Corsair can check those two things, in my opinion, this company from a financial perspective will look a whole lot better. Now, we talked about some of the good and some of the bad over at Corsair Gaming. It's time to talk about the downright ugly, and that is the technicals for Corsair Gaming. The stock has been in a downtrend really over the past 1 year. And what Corsair likes to do is it makes these sort of patterns where it tends to have large declines and then sees a small reversal and then continues to sell off further. But I think what you can learn from patterns like this is really when to step in and out of shares of Corsair Gaming. Certainly if you bought at any point in 2021, 2022, yeah, you were likely massively underwater on this position. But the technicals really tell you when to get into shares of Corsair. And in the past, that was when this first set of higher high was confirmed. We made a high back in August of 2022, right around $17 a share, you can call it. And then Corsair made a subsequent higher high closer to $18.50 back in November of 2022. And that first confirmed a first level of higher highs. And then what you had is a retracement back to trendline. And then you also made a subsequent higher low. And that really is what confirmed that Corsair broke out of this downtrending channel and made a series of higher highs and higher lows. And so your buying opportunity was right here, right around, we'll call it $14 to $15 a share. And we saw Corsair continuing to make a pattern of higher highs and higher lows until, again, that pattern was broken pretty decisively as Corsair made a series of lower highs and then subsequently lower lows. And so when Corsair broke out of this uptrending pattern and confirmed that with a series of lower highs, that was when you hit the exit button on a position in Corsair Gaming and really take your profits from just a short rally in this stock. Now, you are once again making a pattern of lower highs and lower lows. And until that pattern is broken, from a technical perspective, it really does not make sense to enter shares of Corsair. Really, you want to see a decisive break above your previous set of highs, which were right around $14.50. You want to see Corsair come in here, post a set of candles above, we'll call it $15, and then you want to see it retrace back to the bottom end of this channel and then confirm that with a series of higher lows. So you want to see Corsair make a bunch of higher highs and then also a few candles of higher lows. And really, this is your point to enter shares of Corsair. Once it has confirmed a higher high and a higher low, that's when you know it has broken this downtrend and is now once again making an uptrend. And so really, until that pattern is broken and until these trends are really confirmed, there's no reason to step into shares of Corsair Gaming, in my opinion. I think this one can continue to head lower until it really breaks out decisively over this set of previous highs at roughly $14.50 to $15 a share. This is a stock that really shows you the importance of paying attention to the technical patterns, and really the trend is your friend in a stock like Corsair. And once that trend breaks, that is when you know to hit the exit button and move out of your Corsair position. And until, again, we break out of this downtrending channel, I really don't have a reason to pick up shares of Corsair, at least from a technical perspective. And then, as we spoke, from a fundamental perspective, sort of a mixed bag until I see that debt sort of come down substantially and stock-based compensation also decrease in a meaningful way. I will continue to avoid shares of Corsair Gaming, certainly looking like this company wants to turn around and is not trading wildly expensive as well on a forward price to earnings. So there are a few positives for this company, but I think it's still too soon to enter shares of Corsair Gaming just yet. That was my take on Corsair Gaming. Let me know your thoughts on this one in the comment section below. Also, let me know if you would like to see me cover other small cap names. Certainly, we tend to cover your mega cap and large cap companies more so on the channel, but if you certainly are interested in some small cap names, leave those down in the comment section below. I'll take a look if we can cover those. As always, thanks so much for listening, and I'll catch you guys in the next video.